What's up, guys? Alvaro here, and welcome back to the bilingual stock market channel. Let's go ahead and talk about the stock market and about what happened today. And as usual, on Tuesdays and Thursdays, I am going to be filming today along with my friend Mario. What's up, bro? How are you?
Hey, what's up, Alva? How you been?
Doing pretty well, man. I am setting up a new studio, so
Yeah, looks amazing, by the way.
thanks, buddy. Thank you very much,
Yeah.
bro. So crazy day in the markets today. Google and Microsoft posted poor earnings, way
Mm-hmm.
below estimates, and both stocks are going higher after hours. So that kind of signals that the markets are trying to put a bottom over here. We still need to wait for the Fed. Tomorrow we have the Federal Open Market Committee. What do you think? What's your take on the reports of Google and Microsoft? So we didn't
It's
see, I mean, we didn't see big drops,
yeah.
30, 25%, and rather these stocks are going higher despite the fact they posted worse than expected earnings. So what's
True.
your take on that?
Uh, this is how I see it, right? Markets already know they're gonna post negative earnings, so they will only gap it lower if it's like way worse than which the market is already expecting. So since the stocks are already down like what 30% or 40% off their
In the, in,
highs,
in
like
the case of Microsoft, 30%.
yeah, so 30 to like 35%ish from their highs. So like since they're not posting like even more worse earnings than which the market's already expecting, so they're like, yeah, let's just buy it, squeeze it to the upside.
So, but don't you think that at this stage of this bear market, the markets are trying to put a bottom here? Like, okay, I have already discounted a lot of bad news, and I need like more bad news in order to keep on going lower, right? Because tomorrow we have the Federal Reserve. A bear would argue, a bear such as you, would say that
Maybe.
maybe,
All
yeah,
right.
yeah. I mean, I have
All
al-
right.
I have also turned
You
into
hold more puts than me.
yeah, into some sort of bear, right? Okay, but a bear would argue that maybe the Fed hasn't had a big impact on the economy yet because we are at the early stages of a long hiking cycle because inflation is getting out of control. So maybe we could see way worse than expected earnings for Q3, maybe. So that may be the
Uh,
case.
maybe because for now, right, we can't come to any conclusions based on the knee-jerk reactions on the earnings, to be honest. We need a solid data. We need a data from fundamental side that inflation is slowing down, that Federal Reserve is going to start cutting the interest rates and all those stuff, which market actually is looking for, if you ask me. So we need stuff like that to come out in order for market to put a bottom. But for now, it's just like the knee-jerk reactions where the markets are expecting way worse negative reports for earnings, but they got like worse negative reports for that. Like it's like, yeah, it's already priced in, so we already know this is going to happen. That's exactly what happened. So
Yeah, but
nothing
that
bad. So
but that optimism comes from the fact that the markets are kind of assuming that inflation has peaked. So if we left the worst behind us and Google and Microsoft are posting worse than expected earnings,
mhm.
since we already discounted a lot of bad news according to the markets, because we already
Mm.
discounted a lot of bad news. Microsoft is 30% of the highs, and Google must be something like 25 or 30% of the highs. So the markets are like, okay, inflation has peaked. I already discounted a lot of bad news, so I am going to look the other way when it comes to these two companies posting worse than expected reports.
Mm.
And on top of that, tomorrow we have the Fed. And I think that the inflation subject is still being critical over here. Because if the
True.
markets aren't being very demanding when it comes to earnings, which is what is going on as of now, that implies that they have a very positive outlook when it comes to inflation, like inflation peaked. You see
Mm.
what I'm saying?
Mm.
So the Fed, in my opinion, tomorrow we have the Federal Open Market Committee. Remember, guys, 2 p.m. Eastern Standard Time. So the Fed is going to go most likely 0.75% tomorrow, right? 75 basis point. So what do you think the reaction of the markets is going to be looking like if we happen to have either a 75 basis point hike or a 100-point hike? What do you think?
75 basis points is already like priced in. So
Okay.
what's probably is going to happen is the same thing whatever happened in the last two FOMC, right? They'll be having a huge swings to the upside and downside, and then they'll park the S&P 500 right where it was before the FOMC, and that might happen. Or if they put like 100 basis points, the possible scenario is like you'll see big swings in the bond markets instead of the stock markets in particular. I can't talk about the price changes in stock markets, but in bond markets, you'll see the repricing happens because the bond markets will start pricing in 100 basis points immediately.
As of now, the bond market is pricing in a 75 basis points.
Yeah,
so
for now, that's
the most likely outcome for tomorrow's meeting.
Yeah, for now, what's priced in is 200 basis points by end of 2022 and 75 basis points cut by the first half of 2023. That's what's priced into the bond markets right now. But
2%
if they come up with,
by the end of this year, Mario?
Yeah.
That's not enough to control inflation.
That's what priced in for now.
Yeah,
so if they come up with like 100 basis points or whatever it is, then like we got to see what's the reaction of the markets after that.
I mean, tomorrow we are going, as of now, we already hiked 1.50, right? If they go, if they go 75 basis points tomorrow, we're going to be at 225, and we'll still have like two more Federal Open Market Committees. So what are we looking at by the end of this year? 3%, 3.20%? What do you think?
Most likely, like that is possible.
Okay, and
that's very much possible.
And the markets aren't going to be surprised at all by that, right? Depending on inflation. So
depending on the CPI reports which we might get later, and depending on the oil energy prices, like we will see the impact on the CPI, and depending on the stock market as well, which the Federal Reserve uses as the proxy.
So as of now, we have a lot of people holding puts because a lot of people have gotten bearish, myself included. So go ahead and send an encouraging message to the people that are holding puts. Because the trend is down. Today we had a very positive close for the bears because they were able to take out the low of last Thursday, and I think that the S&P 500 actually closed below the 50-day moving average. So the technicals are as of now showing positive signs for the bears. However, on the flip side, the markets are ripping higher after hours because we are seeing Taylor Swift taking over New York City. Shake it off, baby. Everything is gonna be better. So, what do you think, Mario? Is this the time to get bullish, or is this the time to keep on loading up on puts?
So I mean, I've been saying this for a long time now. Like, I am not going to go very bearish until we take out 390 in SPY. And 390 is very important. As you saw today, like that's where we bounce at 390 exactly. So unless we take out 390, which also is the 50 SMA, like 391 to 390 zone, which also marks the bottom of this breakdown candle, which is currently sitting at 389.75, right? The breakdown candle from June 10th. So unless we take this low out, I'm kind of cautiously bullish
in the short term.
In the short term, yeah, in the short term.
Okay, but, in the great scheme of things, you still believe that we are going lower. So inflation is getting out of control. We have a huge mess in Europe as of now. We have a war in Ukraine that is going to take forever until it ends. So your perspective for the long term is still bearish, right?
Yeah, the long term is still bearish because nothing changed fundamentally, if you ask me. So for now, basically what might happen is they're pushing up right now. They'll just come up to run a test over here and then come back down again to run a test to 389. If they break under 389, we can come down all the way to run a test to like 387 or 386. But that, I need to see it happen, maybe happen after Meta earnings, because right now everyone is happy that Google is going up even after reporting bad earnings and all that stuff, but we're still not out of the woods yet. If Meta reports bad earnings tomorrow and they gap the Meta lower like 10 or 15% after earnings, yeah, Google is going to go down lower. Google is going to break 106, just like that. Whatever gains they make today or whatever gains they make tomorrow will be done.
Gotcha. I didn't ask you about the GDP report that is coming out on Thursday. So
that is another thing.
Yeah, that's another important. I mean, we're going to be talking about that on Thursday, but so are you convinced that the GDP is going to be negative? So we're going to be entering into a technical recession.
There is a high probable chance that GDP will come out negative, but if it didn't, markets are, I don't know how the markets are going to react, but yields are going to fly, bonds are going to sell off, and we're going to see
oil
a lot of
is gonna get killed.
oil is going to fly actually if there is no recession, if the GDP report is positive.
No, you're talking about positive? No, I'm saying...
Yeah, I'm talking about positive.
Sorry, my bad. I missed that part. Okay.
Yeah, if it's positive, oil is going to fly again, and yields are going to rip again.
Yeah, demand is strong, nothing is going on. We're good. Buy the dip.
Yep.
All right, if it happens to come out negative, then oil is going to get killed. TNX is going to drop like a rock.
Yep.
And the
TLT will be a good hedge.
Oh yeah, it's going higher. I still have calls of TLT, so I have some sort of hedge, some sort of hedge in front of that situation. Okay, but in your personal opinion, we are gonna get a negative reading, right? For
most probable scenario, yes. Most probable scenario, yes. Okay. Oil might get to $89 or whatever it is in crude futures. If it happens, yields will drop.
We should be buying XLE puts into Thursday.
I mean, it will be a good hedge. It will be a good hedge.
There you go. Let's go ahead and take a look at triple Q, please, and then let's go ahead. Let's take a look at Meta, Google, and Microsoft.
Triple Qs are actually like close right above the 50 SMA as well. Like triple Q was holding on to $394. Is $294 is support.
Yeah, and the burst took out 300 points. $300, which is very positive for them. Yeah. But this thing is gonna, if tomorrow Google and Microsoft push higher, triple Q is also going higher, obviously. So
yeah, triple Q, and not much. I don't see much of an upside. Like, I mean, tomorrow might be a bull trap or whatever it is you want to call it before Meta earnings. Again, there's a lot of uncertainties.
Before Meta earnings and the Federal Open Market Committee, which is at 2 p.m. Crazy day tomorrow, bro. Crazy day tomorrow. Yeah, for sure.
It is indeed. They might just push it higher tomorrow for 1% or whatever it is, and then they'll do the opposite of whatever happened today if Facebook pushed lower. So
where would you be getting puts of triple Q? At what level?
I'm actually not swinging anything. If you're day trading, the best place to like keep an eye out for is the top of the range at $300, which will be a psychological resistance levels.
Okay.
If we get rejected over there, you can just go short again. Like I'm expecting for QQQ to do something like this, and to go like this over there. If we got rejected, come back down to run a test to this lows from the AV VAP, which is currently sitting at $288 to $287.
Yeah, that's a big spot. Agreed. $300.
Yep. Right, so that is where I'm looking for in QQQ.
There you go. Microsoft.
I think they're pushing after us.
I don't know if the conference call already started out. And I got calls. I got in the casino. But I got in the casino with a lot of extrinsic value. No joke, because my calls expire in December. So I am not really concerned about this play. So what price is Microsoft trading at after hours? 252?
Yeah, 252.20, but they have massive resistance over there up top, exactly at 252 to 253, 252.70 to 253. If they open below it tomorrow, I mean, I wouldn't be surprised if they come all the way down to run a test to $245, which is the low, $246 to $245. But below that, we have some standard supports at $250, which is a psychological number.
Yeah, the bulls held today 249 actually. Yeah. Yep. Do you happen to have the report so we can take a look quickly at EPS and revenue?
All right, let me see Microsoft.
Yeah. Or I can check on Thinkorswim.
Microsoft earnings, sales miss, market expectations in the fiscal Q4. Shares decline after. Like the point is, both Microsoft and Google didn't post good earnings. It was kind of dull. But it's not as dull as it expected. Yeah, they both missed.
Both missed. Top and bottom line, right?
Yeah.
In the case of Microsoft,
in case of Microsoft, the diluted late earnings Tuesday EPS was like 2.23, which is, but it was expected at 2.17. Sorry, it was 2.23, and last year was 2.17. And EPS, the Capital IQ expected GAAP revenue was at 2.30, and 2.29 was the non-GAAP revenue, but we got 2.23 and 2.17, which was a miss on the GAAP revenue. The revenue came in at 51.87 and it was still up from last year, but analysts expected it as 52.36.
And take a look
Another
at
miss.
and take a look at the next paragraph. Unfavorable foreign exchange rate movement negatively hit revenue and diluted EPS by $595 million and 4 cents when it comes to EPS respectively. The company said
because
in
the
its
dollar
earnings-
keeps going higher and higher, and that's going to impact the revenue side of things because these are
I mean,
global,
for the companies that do a lot of business abroad, right? For
yep,
sure.
it's
So
a
we can
global
expect
kind of thing. So
we can expect Google to be affected because of
yeah, same.
Forex.
Google said the same thing. Google said the same thing about their miss as well. Like the increase in dollar actually impacted their profit margins. So
Yeah, but as
yeah,
of now,
I mean,
the markets are shaking it off. So it is what it is. What about Google, Mario? Do you want to go ahead and take a look at Google?
Google, let's
Yeah.
see. Google posted a miss, but they're still up after hours. I mean, they're still under this zone, which we got at $110. So, I mean, if you want to trade tomorrow, 110 is your pivot. So let's see how it goes. They're still getting rejected at the 5-day moving average. So if they go lower tomorrow, I won't be surprised if they undercut and test 106 again.
Okay, there you go. Meta. Let's go ahead and take a look. What do you think about Meta? It got killed today, but I guess that it is up after hours because
Not by a lot, by $2 or something.
Yeah, I mean that's a nice push to the upside. Not a lot, but it's an acceptable push to the upside. So most of the stocks out there are going higher on because of Google and Microsoft, right?
Yes.
All right.
So this is the, as you call, canary in the coal mine for now.
Yeah.
This is the last ad mob to report, I guess. I mean, pins are next. Pins will be impacted as well. But bro, if we break below this lows at 156, things are gonna get ugly real quick for Meta.
that area between 160 and 156 is very important.
Yeah, there is a range, right? If you take a look at it, like 156 to like 172, I guess. This is the range which we've been trading on. We had a false breakout to the upside, got pummeled back lower really quick.
Yeah, but the thing is, if Google missed on revenue because of fewer ads and stuff like that, and because of Forex matters, so we can expect pretty much the same for Meta. So we can make
Google
the case.
Google is not dependent on Apple though.
Yeah, they work on different systems. That is true. So we have a lot of headwinds for Facebook for Meta tomorrow, and now the big question is, Mario, are the markets going to shake it off if just as they did today with Google and Microsoft? And I would say, yeah, the markets might shake it off depending on the Fed. If we happen to have a 1% increase, the markets are going to be very demanding with whatever Meta posts. If the Fed comes out and say, yeah, let's give everyone cocaine and let's do 0.75%, then that's it. Maybe the markets are going to be able to shake off a worse than expected report of Meta tomorrow, right?
Most likely, but the user count matters as well. They got to make sure that the number of users who joined is above the estimates as well. If they're not have a number of users.
I didn't check on that on YouTube, by the way. I have to take a deeper look at the report of Google later on today.
YouTube daily active users never matter. The YouTube always keeps an eye out for the ads, but the ad revenue on YouTube is down. This report, that's the problem.
All right.
The ad revenue on the YouTube is down. That's a big issue. And overall, the earnings was a miss, but it's not that bad. But if Facebook, if the newly added users went low, the ad revenue was impacted and all the stuff happened, yeah, we can easily see the drop, whatever we saw, something like here.
But keep in mind, Mario, that Meta is like 75% of the high 70. Unbelievable multiple contraction, right? So for Meta to take a considerable hit, we need a very nasty report. Nasty report, and we need a very aggressive Fed that offers no cocaine to anyone tomorrow. So yeah, this is going to be an interesting one. I mean, in any case, where are you buying puts of Meta?
I'll be buying puts if you break below 156.
Okay, on support.
So until support. Now, if you break below 156, I will buy support. I'll buy puts. And the 156 is a call zone. If they start bouncing from here, that's just trade the range type of trade.
Correct.
Like just 156 to like 172, 172 to 156. So up and down until one of the sides gives up.
Awesome. All right, buddy. Please tell the guys about your Patreon and your YouTube channel.
Yes. So I have a YouTube channel, like the link is in the description. Go and check it out. I post daily videos.
You
I
were
go
making a
live.
bunch of videos about spreads, right? You told
Yes,
me
I
the other
did.
day. There you go. Okay.
So there are multiple types of videos if you guys are interested, like daily educational type of videos, technical analysis types of videos, market fundamental videos. So if you guys are interested, go ahead, check it out. Link is down below.
The link is down below, and go ahead and sign up for his Patreon. I belong to Mario's community. There is a lot of added value in his community, and you're also broadcasting live, right, Mario?
Yes, tomorrow.
You're going live tomorrow at what time? 9:15 a.m.
9:15. We'll be live tomorrow morning.
So if you guys want to have access to a free live stream, go ahead and check out the link that is down below in the description box of this video. Well, buddy, thank you very much. So see you on Thursday. And dude, what a crazy week we are having, right? The markets are trying to put a bottom. They are trying to shake it off. Let's see if they can actually do it, right?
Tell me 1 week, like unlike this week on the second quarter, this like similar to this week. Okay. Tell me 1 week which is going to be similar. I don't think so. This is going to be the most jam-packed week you're ever going to have.
Market Committee, all of these big tech stocks posting earnings. So a crazy week. And see you on Thursday, bro. Thank you, guys. Be careful out there. Tomorrow we might have a bull trap. You never know. Bye, guys.
Have a good one. Take care.
Bye-bye.